Okay, I do believe we are live here. So, good afternoon, everybody. Today is Wednesday, the 10th day of November 2010, and let's take a look at these markets here. If you called a top yesterday, you still have a chance of being right. All's not lost yet. Or if you shorted because you thought yesterday was the top, and that's something you read or heard or thought because of one day of weakness, you still have a chance that you're not wrong yet. We still have to get above 122.95. So you've got 85 cents of protection against those calls for a top, but I think that basically we haven't seen a top in this market. We're still in a strong uptrend. We had a little bit of selling yesterday, but it wasn't a big deal. The buyers came back in here today pretty impressively, took back control. We had 1,800 advancing stocks and 1,100 decliners. It looked pretty grim early on with the advanced decline line, but it fought back very nicely, and around 1:15 p.m. The buyers really did take back control for the rest of the day. So again, we're innocent till proven guilty. These tops don't typically occur just in one big flush. Instead, they're going to frustrate people, and when we still have a lot of strength in various groups of this market. And realistically, we've been talking about the S&P 500 and the strength in the NASDAQ for a while. And what really caught our attention last week was the financials breaking out. And this is the group that we've been talking about could take control and really help this market extend these gains. People have been saying, well, they can't rally without them, and obviously we know the market rallied quite strongly without the financials. Now that we have the financials participating, they broke out, they pulled back, they've tested this prior resistance, and they're really at an important level. We have this prior resistance now looking like it's acting as support, and we have a rising 10, 20, and 50-day moving average. We're also above the 200-day moving average here, and a lot of pessimism in this group. If we look at the pullback here, it's actually a pretty normal type of pullback. What we can do is we can start with a look, for instance, from last Thursday. I think this is really what defines the essence of the move that began. So we can take a look from this low right here to the highs last week and put some Fibonacci on there and say, what kind of retracement did we get? Did we exceed the 61.8% retracement? No, we came right down to the 50% mark, pretty much exactly dead on, almost exactly dead on the prior resistance at about 1508, I think it was. And that's where the buyers stepped in today, and they took back control. We have a rising 5-day moving average. So I think you have to look at this financial group as saying this will now mark an important spot. I don't think we would cave in if we get below 1505, but this does clearly mark an inflection point, and what is, I think, likely to be the higher low that we measure a future continuation higher in this financial market. It's really looking like there's not much reason to think that it won't go on to at least the $16.15 level and test that those post-flash crash highs that were actually $16.13. I really don't see what the bearish argument is technically. In fact, you got to be doing a handstand to think that this thing is technically weak. We're in, we've broken prior resistance. We came back, tested it. It held for now. I mean, if it fails, then obviously, as we get new information, we want to change our analysis, but not from a day trader's perspective. The last couple days we had lower highs and lower lows in here, but the buyers took back control exactly where they were supposed to. So you can't get stuck on one time frame analysis. You have to see how these lower highs and lower lows fit into that bigger picture, and that bigger picture is developing into a nice bullish uptrend here on this daily time frame for the financials. And if they continue to do what they're supposed to do when they break out, that is, they break out, they test support, and they continue higher, then I think that could be really what we see is the catalyst for continued upside in the S&P 500, and we break these highs from just this week. And I mean, the market's gotten extended. A pause, correction is I say it a lot. corrections occur either when the market pulls back price-wise, we get a deeper retracement in price, or as it turns sideways through time. There's always the possibility, like we saw back here, that the market can come, cave in quickly, but not until after it breaks important support levels, it's below moving averages, the short-term moving averages are declining, and that sort of thing. We still have all these moving averages advancing on the daily and in the weekly time frame as well. So it appears to me that this is just a pause for now within this uptrend. There were people yesterday saying, okay, here we go, we're going to close that gap, and as I kind of hammered on that point Friday, not all gaps get closed. Not all, if you're shorting because you think that all gaps get closed, that's something everyone reads in Technical Analysis 101 books, but what they don't tell you in those books is they don't get filled, or they do tell you in a lot of those books that they don't always get filled immediately, that it's a sign of a strong market when we don't get these gaps to be filled, and we've still got a lot of strength in this market. Now, short term, this is an important level we're at. That tomorrow, if we fail in this area at the 5-day moving average on the SPY, and we break this low, then I think you probably got a good chance of this market filling that gap. But you look at the 1 minute time frame here today. What do we see? We see that we came down, we battled with that VWAP, and if we actually look at the ES, the futures, that is, they touched that twice, and right in here we were talking about in the chat room that look out, it could get going here because it had these higher lows coming up to it, and that third test, that's where it blasted off, and we had a test of the volume weighted average price, and it continued to move nicely higher above that volume weighted average price throughout the rest of the session. So the buyers retained control of this market throughout the day, and you have to be impressed with the resilience of the S&P 500. So the Nasdaq, same thing here. I mean, here's a market that's anyone can tell you it's extended, and it has been extended, and we've seen MACDs diverging, we've seen Bollinger Bands touched, we've seen all of the oscillators give us warnings, and those warnings are fine to listen to, but it's only the price that pays. So we have to listen to price and say, we're still above. We still haven't closed except for 1 day below that 10-day moving average. That is a real strong market that does that. And if we're to get a pullback below that 10-day moving average, then maybe we come down and touch that 20-day moving average again like last time. As I pointed out, I think I started pointing this out maybe a week or two ago, but we can take a look at the the measured move here, this point A to point B, and add the height of that to basically point C. This would be point B to C, and then C to D would give us a price objective, the height of A to B. So what we do is we take that, the height of this, and we add it to that pullback low, and that would give us a price objective of near 55.5 or so. You can see here in the daily time frame, and when we back it out to the weekly time frame, well, that also brings us into contact basically with the highs from 2007 up at 55. Now, what happens up there? Does that mean we run into a brick wall and we turn back down in the Nasdaq? I don't think it's likely. It's definitely an area that you want to be aware of, and it has the potential to become resistance, and that resistance will likely, if we get there, at least be an area to pause, I would think, because you look at people, the psychology of it is that people would be thinking, well, it's approaching the 2007 high. I'm going to hold until it gets there, and then I'm going to let some of my stock out. Shorts might be thinking, okay, it's going to run into a brick wall, so I'm going to sell short up there. Well, you have more supply. You have the longs selling out that supply, and you have the shorts who are adding some supply as well, and then that kind of diminishes the demand. The buyers start looking at, well, we're extended here, maybe I'm going to stop buying, and then we have that self-fulfilling prophecy of prior resistance becoming support. So we'll see how it works out up there if we get there. But for now, that seems the most likely upward objective for the Nasdaq. Really impressive move in here. I'm sure we caught some shorts in this move down below that rising 5-day moving average. But very nice recovery back up into this little range. Right now, I see we're trading at $53.56. So we're trading off just slightly here, I guess, after hours, and that's maybe I don't know what it is. It looks like Cisco reported, and Cisco had closed the regular session at 24.49, and we're seeing some weakness in Cisco right now live. We're looking at this initial move up, and here we are selling off about 80 cents. Now, not all the time does the after hours numbers hold. That is, we might see right now, like we're at 23.60. We're right on that 20-day moving average, basically at 23.55. Tomorrow morning, we might actually open at $25 a share on Cisco after this news has been a little bit digested more. So you don't want to get panicked and freaked out just because of one company. You look at the overall market and you say, we've got a market with leadership from companies like Amazon that's up at all-time highs, that continues to show strength in here. You look at a stock like Netflix, which is real strong in here today, and Netflix had broken some resistance here at a pretty obvious level. So Netflix was consolidating, it rallied up, pulled back to that rising 5-day moving average, and now this 174 level should become support in Netflix, and it looks like Netflix should be able to continue to move higher. So we've got, like I said, Amazon. We had a beautiful setup in BIIB today that I completely screwed up, but we've still got good setups. That a stock like Biogen above a rising 10, 20, and 50-day moving average, you take a look at it and you say, well, how'd you screw this one up? But that's my own personal demons. But we had in here a little shakeout in this stock, and I've failed to really pay more attention to it again. But once it really took off after that shakeout and recaptured the VWAP, beautiful trend in Biogen IDEC today. Research in Motion had a great day today, and this is a stock that's been strong. It had been strong. It's above a rising 10, 20, and 50-day moving average. It was up on big volume, consolidating at this prior support, which turned into resistance. And then they got some news today, and beautiful rally in that one. We've got a stock like Humana. Looks like it's setting up for continued upside. Look at Humana here on the weekly time frame. We broke some resistance a few weeks ago, and it looks like it should be able to continue to move higher. So you look at this daily chart, and it's been consolidating above this rising 10-day moving average. You look down to a 30-minute time frame, and you see the direction of the 5-day moving average is slightly lower. Drill down now to a 10-minute time frame, and you can start to see that we've seen this little pattern of lower highs and lower lows. Now it looks like this is a shakeout, and we get a recovery back probably up through $60 a share. I would think that Humana is probably good for a couple points up towards $62 a share or so. FFIV is a super strong stock that refuses to go down for more than just a couple intraday moments. CMG, another hugely strong stock. So there's a lot of good stocks out there. If you want to focus on the negatives, focus on the big volume reversal in gold. Well, really, that was one day sell-off, and it wasn't down a whole lot, really, the GLD yesterday, and we're still in a beautiful uptrend here. Same obviously goes for silver. Now, silver has, you could say, a much more extended look to it, and this volume is reason to think that we're going to at least turn sideways for a while and digest these gains. I don't think you can expect this SLV to continue to rally at the ferocious pace that it's had, but there's no damage to the trend here. There's no evidence of a downtrend. You want to look for a downtrend, on a 2-minute time frame, looking at yesterday and today. Okay, we're below the 2-day volume weighted average price. On the 10-day chart, though, we look at it, we're just holding this rising 5-day moving average. It's really not a lot of damage done here. So the point is that we've got some positives. Even these the lowly home builders are holding up. They broke past that resistance, and they're doing what they're supposed to do when a stock breaks out. It doesn't mean you can expect them that they break out, they pull back, and they just continue higher. But this is the textbook of what they're supposed to do. This is the before picture on those technical analysis books. This is what it looks like, typically before we get the next thrust higher, and resistance becoming support, rising moving averages, and you look at it and say, well, then what's the proper thing to do? Is to look at shorter term time frames, and you look at, okay, we got up to this 1650-ish area, showing a little resistance, maybe a little pullback and a push up through 1650. Then that's where the next round of momentum to the upside begins in the home builders. But to say that, well, the home builders are a broken group, there's problems with the industry and all the obvious stuff that's in mainstream media, that's not, the headlines don't pay. What pays is price action, and it's pretty bullish here. We look at the IYR. That was the reason, that I'd said yesterday that, it seemed like, I put this out on Twitter, said that, we've got a strong and persistent sell-off yesterday in this IYR. So this was the IYR intraday yesterday. Strong and persistent sell-off. We managed actually in here to get back above the average price of the last 2 days in the IYR though. But it seems as though the IYR, it sold off on heavy volume, got back into the range. Last time it did this, we were concerned about it on this day. It had further weakness, and then it just slowly ground back higher and recovered nicely. So even in the IYR, it's holding the rising 50-day moving average, and we still have a strong uptrend, in existence that's given us, we get a big volume bar down, a lot of people get excited and call a top and that sort of thing, but it's realistically the evidence just isn't there. The Russell 2000, as you know, this is the group I've been talking most bullishly about. We're close to testing those highs for the year. There doesn't appear to be any reason to think that we're not going to be able to exceed those highs up near that 74.5-ish area, and it's just, again, it's just bullish price activity. We've got the rising 5-day moving average, a little shakeout below them. These lows from today and yesterday will be important markers basically for the rest of the week at least, that we want to see these pullback lows hold. But bullish action. You look at the oil market. We spoke about this one last week and how it looked like it was breaking out, and we've got this USO looking like it's headed for maybe the 39 level or so, for at least near term. That it ran up, it consolidated in here, and now it's pushing higher once again. So it's acting like it's supposed to in this type of environment. We've got it above all these moving averages. Maybe it's headed towards 42, and I think near term we have to stay focused on probably 39 is the more realistic level to focus on in the USO. Semiconductors, they're another group that has been doing what they're supposed to. They came up to that resistance, then as we know they broke out. They just continue to run super strong right over the short sellers, and now this prior resistance being tested and holding a support, it's tough to read anything bearish and take it seriously. So today's low in the SMH down near 3050, that'll be an important point going forward for the rest of the week. If we break below that, then you want to get defensive on these groups. But these longer term charts are also looking bullish, and there's really not any reason that I can see to be bearish on the overall market. Individual stocks, yeah, we're seeing some stocks pull in, but really not nothing bearish looking here that you can hang your hat on for any real period of time. So let me take a look at Twitter, see if anyone's got anything here they want me to take a look at. I kind of covered everything there. Thank you, Dr. Perlman, and my shrinky friends, Perlman and Darren, at a trade that is, for the retweet. Rosca Hawaii? Today Trader, Greg Harmon, Doug, thanks for the retweets. Eric also, and Bada44. What a bloodbath! Hot stock earnings is saying what a bloodbath today on CAGC for at least for investors have fourth quarter to look to. Fourth quarter, strongest quarter for sales. CAGC. Let's take a look at that. Yeah, the headlines don't pay. It's the reaction that does. This CAGC got smacked down. I saw that must have been why seed was down as well, or feed was down as well. But let's take a look at how about a look at ARBA for looks like Flong. Ariba looks like it's consolidating here right underneath the highs, and looking at this daily time frame above 22, it looks like it should be able to continue to move higher. On the weekly time frame, it's in a nice uptrend. It's been a grinding uptrend. It hasn't really gotten that nice thrust push higher, but it's capable of doing that. I think that Ariba looks good above $20 a share. It probably, or maybe not even 20, maybe just below that 20, about 1995ish or so. That Ariba could really get going nicely. So I like the way that Ariba is set up. How about a look at USU for? And this is USEC. I think they've had a little bit of it's been pretty volatile in here lately. I kind of. I was looking at USU because USEG, URRE, these URRE, some of the uranium type plays have been so strong, and I guess USEU maybe isn't an uranium play like I thought, but the daily chart really kind of looks more neutral than anything, neutral to improving. For it to really get some upward momentum, it probably needs to clear about that $5.85, $5.90 level. It had this little start. It caved back in, so that which didn't kill it, I think in here made it a little bit stronger, but now it's going to need to go up and test that 590, and that's where this gap occurred as well. So that gap support right here, this support had become resistance on two occasions. So I think for an upward move to really be sustainable in USU, you really need to see it above 590. You can look at it and say, well, it's making this triangle that it broke, but I think 590 is the bigger level. It's worthy of keeping an eye on, but not quite ready to go yet, it would look to me. How about a look at DWA for OKRPs. DWA, what is that? DreamWorks, right? I haven't looked at that one in a long time. DreamWorks. Now here's what a breakout's not supposed to look like. Okay, what we want to see, going back to the XLF. Here's the danger in the XLF. We break out, we pull back. Right now, what happens? Well, looking at DWA, for instance. We break out, we pull back, it runs, and then it just caved in. So this looks like a failed breakout attempt in DWA. So I don't think that it's going to turn itself around here. I would have been excited about it over here and thinking that, at this point when the buyers took back control on that 30-minute time frame, that would have been good. Now we're below a declining 5-day moving average with lower highs and lower lows. It's back kind of into this range that got people excited on that breakout. So, it got up to this prior support. That support became resistance. I don't think this. I think this one needs more time to heal. It just it tried to go, and and again, that's the danger, or that's the potential danger of the XLF, is that the XLF breaks out and then caves in. Well, trying to predict that no one can predict that sort of thing, but recognize it as it's occurring in real time, and thinking of your if-then scenarios. If it rallies and then it breaks down, well, then maybe then that's the really good place for a short sale. But DWA looks like a failed breakout to me, so you just you can't really take that seriously, I suppose. How about a look at MGA? The auto sector is one that no one talks about. Magna. I bet you there's someone that talks about it. I know it's not one that I talk about a lot, but Magna, look at this nice, beautiful uptrend. I mean, it's just been a persistent uptrend on the weekly time frame, higher highs and higher lows. And if you look at these highs and lows that I'm pointing out, right? We have this move higher, a pullback, move higher, pullback, move higher, more of a correction through time, another thrust higher, pullback, move higher, pullback. Now, does it look like we're ready to begin a new leg higher, or does it look like one of these higher lows where it's extended and maybe there's a little bit of danger that you're chasing it up here and there's the possibility of a pullback coming? Let's look at this as well. Resistance becomes support, resistance becomes support, resistance becomes support. Will this resistance become the next level of support? So this resistance, in other words, becoming support here. This resistance becoming support. So I think it's in a nice uptrend. You cannot argue that. However, it just it seems pretty extended here. So I would be careful with it. There's no signs that it is reversing. It's just extended pretty far. Where has it come from? Where does it have the potential to go? It's rallied from $75 a share basically up to 100. So it's rallied 33% in the last 2 months without a real correction pullback. Now this looks like it'll be an important level of support. Breaking 98, maybe there's going to be a little bit more weakness, but lower high for now is what this looks like on the intraday time frame. You put a lower low with it, it might motivate some bigger profit taking from people who are involved on these bigger time frames, and we're looking at this saying, this rally may have run its course. It doesn't, again, trying to pick a top is a foolish game. There's no evidence here of a top, but you got to be careful with it. So that's going to do it, everybody. Thanks for tuning in. I will be here again on Friday. If you have questions, let me know on Friday. We'll take it from there. Meanwhile, be disciplined traders. That's really the key.